On to earnings conversations then. SP Apparel is the next management on the show. The company saw numbers that were stable. Revenues were up 35%. The margins were also they were flat. Mr. P Sundararajan, who is the chairman and managing director at the company, is joining in to discuss the road ahead. Mr. Sundararajan, good morning. Thank you for joining in. We'll start off with the top line. Mr. Sundararajan, you had reported a top line of 1395. You had guided for around 15 to 1600 crore. What led to that miss, and what are you envisaging for FY26 now?
Yeah, this is we after having acquired this young brand, so we have given this new number as an expectation. But in the core business, SP Apparels Limited, there was some challenges in the shipments. This got deferred because the customers wanted to push it to the next quarter or something. So that has, some of the shipments have happened immediately after the March. So this will come into this Q1 now. So otherwise, we are in line with what we have expected. And for FY26, yes, as we have been telling in all the investors that we are looking at after acquisition of young brand apparels, our capacity has grown by about say 1,300 machines, which is about 1/3 of the existing capacity. And now we have gone into Sri Lanka offshore production, where we are planning for, already we have acquired one factory, and there are two factories already been signed MOU, and the fourth one is on the way. So by end of March 26, we will be increasing our capacity by 40 to 45% from offshore production itself, in addition to our India growth, capacity growth. That's our direction.
So would it be fair to assume that you would end the year 2,000 crores plus on the top line?
Yeah, if the capacity goes up by about 40 to 50%, so I think naturally we should aim for that, because our existing setup with the young brand one and the Sri Lanka operations, in addition to our increase in our existing setup, why it should not happen? We are aiming for it.
Mr. Sundararajan, you mentioned earlier that there were some delays in shipments that have now happened after March. Could you tell us what led to those delays from the customers? Have you been impacted in any form with this tariff flip-flop that has happened from the US?
No, that's not the case, because we with regard to that, when we have booked some orders out of Sri Lanka during the last quarter, there are some difficulties in the acquisition, setting up this shipments thing. So we had to literally, bring those orders back to India. So that got delayed. And as I say, that there has been always challenges in India with regard to the workforces. So the machines did not run as we originally planned. So that was also, there is a small slide, so which we have managed. That's the very reason why we are going to Sri Lanka, is where we are getting skilled up and running factory operators. So that's going to be a fantastic strategy, what we are hoping so.
So what does that do to the entire exports picture, Mr. Sundararajan? Because your exports business was almost around 90% of the overall top line. So what are your plans for exports this year? And if you could also tell us how much of your exports are to the US markets, and considering all of this tariff uncertainty that has been in place, what are the kind of conversations that you've been having with your clients on ground?
Yeah, see, after acquiring young brand is doing only American business, which contributes about, I would say, 25% of our total business. So American market is about 25 to 30%. The rest of all for the UK and the EU market, including Sri Lanka shipments. So now we are slowly looking at increasing the US customers also, because India's tariff is comparatively lesser. And because of this, anti-China and the Bangladesh thing, so that we are expected to get more business into India. And we are trying our best to increase the capacity in India as well. Because US, out of Sri Lanka, it is not possible at the moment, because the tariff is on the higher side. And we are hoping for, bringing the tariff down again, back to 10%. If that goes, then we will have more shipments out of Sri Lanka as well to the US market.
You mentioned the UK as well. So with this free trade agreement that has been signed with the UK, what are the kind of synergies that you are expecting to come to you in terms of business opportunity from that market?
Yeah, see, already that's going to be a benefit to the customers because we are not going to be benefited. So India will be getting more business as against Bangladesh and Sri Lanka due to the duty-free thing. And the challenge is the capacities for all the manufacturers, garment exporters, the capacity is a big challenge because the more orders are coming in. So we are looking at all the possibilities, how we can increase the capacities within India.
Right. Mr. Sundararajan, what about margins, sir? You ended FY25 at 17%, but your historical highs in FY22 has been 22%. Do you expect to get back to 20% by the end of this year, or because of the acquisitions that you have made, your margins would remain around that 17-18% mark this year as well?
No, it's like this. Our back office expenses are on the higher side for the amount what we are spending in the back office for designing, sample purposes, marketing, and everything. We should be doing at least about 2,000 crores in order to get the better margins. So we have been trying all these years along to improve the capacity up to about 5,000, 6,000 machines. But now by acquiring the Sri Lankan factories, straight away our capacity, we are expecting capacity to be about 7,000 machines from 4,500 in the next one to 2 years time. Automatically our back office expenses will hopefully come down by another 2 to 3%, which will in turn help us to improve the EBITDA margin to 20%.
So not this year, but maybe next year?
Yeah, it will start improving from this year onwards.
And what does that do to your debt picture, Mr. Sundararajan? Final question from mine. When do you expect to bring that down? Your debt had seen a slight increase because of this acquisition. When do you see that tapering down?
Yeah, I think probably see the fact is what we acquired are already running full. So which means the return on investment. We are expecting it to be about 4 years of time. So in 5 years time, probably we will be able to get back all, including the young brand where we have acquired it. So all of this put together, the return on investment we are expecting to be about 4 years time. So gradually that might come down.
All right, Mr. Sundararajan, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of SP Apparels on the road ahead for the company. Take a short break. Back on the other side with Abneesh Roy of Nuvama Institutional Equities to discuss the ITC block deal. Stay tuned.